Happy Monday and happy trading, everybody. This video is going to go on both of my channel, and this video is going to talk a little bit about inflation, recession, the economy, the macro. I know for my crypto heads, you don't really want to hear this, and I know for my stock heads, you guys think this is boring. But the funniest thing is the information that I'm giving you in this video, the video from yesterday and the video from earlier today, is some of the most important information, data, and knowledge and research that you can possibly have when it comes to a bear market, where it comes to an economy that we're living in right now. We're literally living in a story, and this story is going to be told years from now. The next time there's going to be an economic downturn, the next time there's going to be a recession, people will be using literally our situation to try to explain what's happening in their current situation. They're literally going to be saying, hey, this is what happened in the past. Maybe this is what's happening in the present, to try to predict what's happening in the future. Now, this is going to happen in the next downturn, which is going to be approximately 10 years from where we are right now, right? Approximately. Okay, look, I keep giving you these videos. It gets really bad views, and that's okay, because some people actually gain some knowledge and get some help from this. So I open up my emails in the morning to look what I could tell a story about, what information I'm reading. So I get an email from Robinhood, and Robinhood gives you a lot of information. I want to go right here. So this says, from Exxon to Valerio, oil big shots are expecting to rake in historically huge profits, but the gassy golden age may be over. Guys, when I report things, I'm not always looking at an article. Sometimes I'm talking off my dome. Not sometimes, a lot of times, right? I wouldn't say the majority, but a large minority of the time, I'm just talking and thinking theoretically, because that's what investing is. You try to predict what's going to happen. So I've been correlating the prices of crude oil and the prices of gas at the actual pumps for the last couple of months, and correlating that to what's going to happen with the inflation, to correlate what's going to end up happening with the recession, so that we can somehow, some way, some shape and form prepare for the next bull market. Because all the biggest money is made not at the top when it's going up. It's made preparing right now for the next bull run. That's how you make the money. That's how rich people become wealthy, right? Middle class become rich. That's what I'm trying to do. Middle class becoming rich, so that my son can be wealthy. That's the whole plan here. And then you have these articles that come out, and they kind of give backing to what I'm saying. What I'm saying doesn't mean that I'm right. Doesn't mean I'm wrong. It just means that I'm an entertainer and educator. And the best you can do is the information that's in front of you. When gas was $6 a gallon, it sounded like a steal. You know the pump anxiety is real. U.S. fuel producers are on track to rake in record cash windfalls. The largest independent oil refineries to collectively make $14 billion from refining this quarter. Companies like Phillips 66, Poised, Valeri, Marathon Petroleum. Oil biggies like Valeri started reporting this week, and that expected profit margins are wild. Exxon, which reports on Friday, said the fuel profits could balloon to $4.4 billion. Compare that to an average profit of less than $860 million for the same quarter from 2017 to 2019. Huge profits, guys, huge profits. Thanks to fuel prices, Exxon forecasts that total earnings could hit $18 billion, which would be its most profitable quarter in decades. Huge. Chevron, which also reports Friday, is expected to have profit nearly triple from the year-ago quarter. In the first quarter, its earnings more than quadrupled. So first I had a quadruple, and now it's going to have a triple. Interesting, right? This is a very, very interesting article right now. Read this. But oily profit could be peaking, or may have already peaked. Summer is usually a busy driving season, but jaw-dropping gas prices are starting to keep Americans off the road. Drivers pumped 10% less fuel in the week ended July 9th compared to last year. Meanwhile, refineries are cranking at full capacity. So Biden tries to reduce the oil prices, and they're trying to blah, 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 blah. I've said this many times in this channel. You cannot increase refinery production because we have all of these ESG laws, right? Environmental laws. Now, I'm not debating if it's good or bad. That's not what I'm saying. I'm saying you literally could not increase refinement. You cannot increase it. Maybe a smidget, but for the most part, everybody was going at 110%. And not just in the United States. So the question was, how are you supposed to bring down inflation? Since energy accounts for over 35% of inflation, the best way to reduce inflation is energy. Why? Everything that you do, all the deliveries, all the shipments, everything is run on petrol, gas. Everything. And if we can somehow reduce the price of gas, then we're good. So about a month ago or so, Biden sent a letter to the oil producers and he says, hey, can you try not to raise the prices? Now, this is counter-capitalistic. But the reason he said that, and I'm not agreeing or disagreeing with him, I'm just giving you guys the facts. The reason he said that is there was always an ability to lower the prices. You think I'm lying, right? The only reason the prices were skyrocket high is because the oil companies are taking so much advantage. They literally took us and bent us over. And they did this because there's so much demand, pent-up demand, and bottlenecking. And they know that people are going to pay the prices because they need to. They have no choice. Well, what happens is there's something called supply and demand. The supply is steady, right? You can't increase it. The supply is steady, and you can't decrease it because you need a certain amount. So the supply is always steady. Right now, we had crazy demand, so the demand outpaced the supply. But now the demand is starting to go down, and there's more supply than demand. What do? You lower the prices. Why? As you lower the prices, okay, right now you had 110 people for 100 of gas, for example. Now you have 90 people for the same 100 of gas. So if you want more 10 people, you don't want 110. You want 100. So you're always producing as much as is getting eaten. You got to lower the price of gas. As you keep lowering the price of gas, more and more people are going to want to buy that gas. And then you have something called equilibrium. And equilibrium is where the demand meets the supply. Allocated supply, allocated demand. And I've been saying this for quite a while. And that's how I'm trying to predict what's happening with the economy. You guys all think I'm an idiot. That's okay. But for the few people that actually listen to my channel with open ears and open eyes, I appreciate you. And hopefully you guys are making money. Or will be making money. Less demand and more gas supply equals a shrinking profits for gas giants. Case in point, gas prices have dropped for the last 30 days. Let's read that again. And I've been saying this for months. Less demand plus more gas supply. Remember, the supply stays the same. It's the demand that's going up and down. Equals shrinking profits for gas giants. Prices have been dropped for 30 days. I've been following this for nearly 2 months now, and I'll show you the gas prices in a moment. I keep telling you the prices are dropping. Nobody's paying attention because you're not taking a picture every time you gas up. Do me a favor. Every single time you gas up, take a picture at the pump and tell me what you're going to see in a month. Everything is relative. Since refining capacity was drastically slashed mid-pandemic, inventories are still relatively low and prices are still relatively high. I wonder why refining capacity was drastically slashed mid-pandemic. Very, very interesting, right? Very, very interesting. Takeaway: a recession could tank gas prices, and if the US is already in one, it likely will be soon. And if the US isn't already in one, it likely will be soon. Higher supply and lower demand are already pushing down gas prices, but a recession could tank them. Oil fuels the wheels of economic activity and suffers when it slows. An economic downturn means less traveling, less spending, and less manufacturing. But for this year at least, refineries are on track for some banner profits. Why? The gas companies are charging an exuberant price because they're preemptively preparing for bad times, just like we're preemptively preparing for good times. And if you've been watching this channel, you've been preemptively preparing for bad times, which you're having right now. The thing is, most of America, most of the world, they're only now starting to prepare for the recession. By the time they're ready and prepared for the recession will be over. The recession will be at its second wind, right? Like, it's going to be done, guys. Now I'm over dramatizing this and I'm over giving you guys the numbers, right? I'm not giving you guys the micro, I'm giving you the macro, but that's exactly what they're doing. They're preparing for a recession now by charging crazy prices because they know they can't charge the crazy prices when the recession comes. By doing this, they are actually contributing to what's about to happen in the recession. The Federal Reserve, the US government, whatever you think is not it. They want this to happen. They want people to be out of work. When there's people out of work, there's less demand. When there's less demand, all prices have to go down because now you're only accommodating a smaller pool of people that can afford what you're selling or what you're giving. When that smaller pool of people see that the price is going down to a certain point, there's going to be more people that are going to join this pool. Guys, this is mother effing economy 101. Straight up. This is the way it works. I want to show you gas prices. I've been following the gas prices literally every single video that I do about the economy. Check it out. Current average $4.35. Yesterday was $4.36. A week ago it was $4.52. A month ago it was $4.90. When I started following this was $5.01. That was the price of gas. So it is going down. You're never going to notice from 436.6 to 435.5. You're not going to notice that. It's nothing. It's minuscule. You might start noticing 452 to 435. That you start noticing. You definitely notice $5.01 to $4.35. Guys, everything is relative. Everything is relative. This is how you prepare in economics. This is what all the economic geniuses, all of these analysts, this is what they do. They analyze data. They take raw data, that's raw data, and they process it to try to get you some preemptive knowledge, to back up your hypothesis, to reinforce your theory of what's about to happen. Guys, I know a lot of you guys are not gonna watch this video, and that's okay. Again, for the very few people that have brains and actually like to learn, I appreciate you guys so much. Trust me, this is not what I wanna be doing. I'm on vacation, but I'm so very joyful and happy if it helps at least one person out there try to make some type of decisions. And I'm not gonna tell you what those decisions are. That's up to you. All I can do is give you the data. Thank you. Have a great day. I'm gonna go eat some fresh fish. Take care.